Ladies and gentlemen, we're on day 159 of Ukraine's resistance. This is Mediacentru Ukraine. My name is Vasyl Furman. We're starting our conversation with Vasyl Furman, Deputy Head of the National Bank, Deputy Chair of the Council of the National Bank of Ukraine. Hello, sir. Hello. The first question is quite simple. The rate. What is going on with the currency exchange rates? Who's to blame, and what are we to do? Okay, well, simply said, the hryvnia rate yesterday today is actually strengthening in relationship to the dollar. So in the first days of the war, we set the rate at 29.25. It was the correct decision that helped us hold the macrofinancial situation stable. During this fixed rate, there are many. There are many problems with that. But during the war, this was the best model. This was compared to the floating rate. We saw some disbalances, and we needed to increase the rates. About 10 days ago, the National Bank set another rate at 36.6 hryvnia. Again, this still corresponds to the situation. We saw how correct the decision was. For the first time in the months of the war, the National Bank has bought over $650 million over the past week. This hasn't happened since the start of the full-scale invasion. We've seen how, as far as the cash and the non-cash market, we see that the cash market keeps growing during the war. Is constantly growing. Over $300 million is being purchased every day, and the cash market is not very large. About $50 million is being bought and sold today. Additionally, the National Bank has constantly loosened its regulations, has allowed the banks to sell, has removed the restrictions on the rates. So we ought to say that there are no macroeconomic reasons for the hryvnia in terms of cash to weaken. We haven't had that. It was more a psychological factor from the point of view of the buyers, speculative factor by the sellers of the non-bank financial institutions. So clearly, the National Bank decided and continues to use these interventory sanctions. I'm sure that the hryvnia will strengthen. In my opinion, the currency rate that we have set, 36.6, is close to the market rate, and the cash hryvnia ought to be somewhere within those limits. So the fact that people in vacation. By the way, I haven't seen these kinds of advertisement in Hungary or the Czech Republic or Poland. So I think the National Bank has made the right decision, in my opinion. Why now? I've asked this question of my colleagues. Why now? Why all these different speculations about these things? The answer was simple. Well, it wasn't. We only started regulating the non-bank financial market about a year ago. Prior to that, there was the State Commission on the regulation of financial services. Now this segment of the non-bank market is similar to our banking market prior to 2014. So it's under-reformed. It needs heavy reform. It needs we need new legislation. The last year, the National Bank has really put their efforts into this, and we're sure that this segment will be just as reliable in the nearest months and years as the banking financial sector, as we see the banks have been working during the war. So as far as the rates, of course, there were situational psychological factors, but as far as the forecast, our trade balance is still negative. It will still pressure the hryvnia. What is the forecast about the rate by the end of the year? As far as the payment balance, it's actually positive this year. As far as this year is concerned, according to the forecast by the National Bank. Yeah, starting next year it will be negative, But the question is, we have significant deficit, minus $5 billion, and this will be a lot of work that will need to be done by the Ministry for Finance to attract external or internal investment to cover state expenditures. So of course this affects the national bank also through the monetization of the budget. In the months of the war, we have printed over 250 billion hryvnia to finance state expenditures, constantly stressing that the Ministry for Finance needs to find new, different sources of funding, because printing hryvnias will, of course, affect inflation and devaluation. So the Ministry for Finance are increasing the rates for internal loans. We see the return of some of the taxes that we've had prior to the war, and I think we need to continue in that direction. Obviously, there's a lot of work to do for the National Bank and the Ministry for Finance for attracting external investment, because these minus $5 billion, we have to receive external funding. The needs of state expenditures are great. We've seen ideas, thoughts that we might need to attract up to $9 billion every month. Why? Because we have a lot of expenditures that have to do with the war, perhaps the reconstruction of infrastructure or the destroyed residential infrastructure. So the number ought to be higher than $5 billion. As far as the hryvnia rate, we do not offer any forecasts during the war. I just offered you my expert opinion. In my opinion, this new rate of the National Bank in the non-cash market and the cash rate, it ought to be within that kind of within those limits. To ask another question, there was the interesting decision to prohibit to publish the currency exchange rates. So when I was walking by the bank, I saw the rates. When I reached the exchange booth, I didn't see the rates. How does that work? What is the point? What is the point of this prohibition? Okay, could you tell us about the banking? This was a bank with the letter A, and the rate was 39 comma something, but not 43. Okay, so why? The reason the National Bank has decided not to show the rates for the non-banking institutions. Again, I've been to different countries in the world, and I was always surprised why there are so many exchange kiosks and advertising in Ukraine. By the way, this advertising is often affects the expectations of people negatively. Why, for instance, in Hungary or Poland or Czech, they don't have that? So the fact that the National Bank came up with this decision, I think this is one of the reforms that we're moving towards. By the way, we're trying to reform our banking system according to European directives, etc. We'll be doing the same with the non-bank financial institution. Perhaps it's a coincidence that the war started and then this week this reform started. Well, because the reason being that the non-bank financial market actually switched to under the regulation of the National Bank 1 year ago. Perhaps it took this year to develop the legal framework, introduce the transparent property structure. We can say that this market is under-reformed. It needs further reform. So the fact that the rates have been removed, I think it's better for the market. It's rather a pro for the market than a con. As far as the banks are concerned, well, it's not. The thing is that we're not seeing, even if the banks do announce it, we don't see as much of these announcements as with the non-bank institutions. So now the demands are about the same for the banks and for the non-banking institutions. When you enter a bank, you see what the rates are. When you come to an exchange kiosk, you can also see once a day it will be printed what currency is being bought and sold at what rate. Can we talk about the banking system then? Perhaps it's clear that over the first 6 months of the war, the banking system has survived, which is great. But what might the prognosis be of its further development? Because the banks don't have access to the markets for making money. They're not providing the sort of services to the extent that they could, such as attracting deposits and offering credits. What do you expect from the banking market of Ukraine? Look, we have to say that the banking system reached the war with substantial amounts of capital. It was undergoing reform and was pretty lucrative, was making money. Over the 5 months of the war, we can say that the reforms, the heavy reforms, the difficult reforms that have been done these 7, 8 years, according to the Basel standards, European directives, working with the International Monetary Fund, the demands by the National Bank, the trying to improve the health of the banking system. But today, the banking system of Ukraine is holding the line, holding the financial line, so to speak. Yes, if we look at certain indices, we may have up to 20% of problematic assets. But I don't think I don't think we will see a collapse of the banking system because reforms have been done. In the first days of the war, the national bank set objectives for the banking system. You know, the round-the-clock work. This is being done today. The second goal was to preserve the funds of the legal entities and individuals. Moreover, the parliament passed the law that the money of the residents is guaranteed, of the citizens is guaranteed. The third goal was for the banks to show a transparent accounting system without hiding the problems that might arise because of the war. This is being met. There was another goal having to do with joining crediting programs, particularly the state programs. Perhaps I'll say more about this, but we're also working in this direction. What we have today, as far as the banking system, we have the banking system today so far is showing loss, and in the first 6 months, the loss has been 4.6 billion hryvnia because we are creating reserves to cover NPLs. Perhaps the credits that are problematic now will not be problematic later, then the banking system will be turning a profit. As far as crediting, we crediting has been increasing. Obviously, the war has has changed things. And if we see during the war during the full-scale invasion starting from February 24th, we've seen a fall of 7% in crediting, so about 16 billion hryvnia. In the corporate segment, we have the opposite. We have growth. Since the start of the war, the non-cash credits have grown by 11% since the start of the year. So this is a massive increase. And the crediting is developing in two directions primarily. The state programs, 579 we know. The banks have offered credits of over 41 billion hryvnia. And the number of borrowers, this is over 11,000 borrowers all over Ukraine. As far as deposits are concerned, the individual deposits in the banking system have increased by 80 billion hryvnia. The legal entities have increased by 55 billion hryvnias. Yes, the deposits of the individual citizens have decreased in terms of dollars. We're seeing a drop of $1.1 billion. On the whole, the citizens seem to trust the banking system. And if we look at the individual deposits in hryvnia, then this index is about 25, showing a growth of about 25%. So we see that people trust the banking system, or trusting the national bank, the reform. By the way, we should point out that the national bank has moved quickly in the but the change in the monetary policy, the change in the currency market since the first hours of the war, the fixed rate has had a lot of has had an overall net positive effect, has been a net benefit for for the financial stability in the state, for the stability of the currency market. And we see that even despite the fact that the hryvnia is weakening, by the way, as far as the weakening of the hryvnia, of course, there's the factor of the war, right? But if we look at other countries, developed countries or countries that are developing countries, we see that the trend, many the currencies of almost all the countries that I've seen are weakening compared to the dollar. The euro is dropping 20% a year next to the dollar. The Polish zloty has dropped 16%. The Turkish lira by 17%, and many different currencies of different countries are weakening and probably will continue to weaken next to the dollar, against the dollar. So we have this universal trend because there are reasons for that. And then my final human question to you, once we're talking about trust and deposits and credits, I will not ask you how many, but I can ask, how do you personally keep your savings, and what can you suggest to Ukrainians? This is an interesting question. I've thought about this many times, and I've even answered this kind of question. Look, it's a difficult question. I'm spending the money I'm making. I only make. I'm not. There's not a question of me. Do I buy dollars or do I not buy dollars? I'm not actually. I don't have a lot of savings. But in theory, if you had hryvnia and you want to save, you want to make some savings. Well, as far as the banking system, yes, there are different banks. There are the large banks that are in no hurry to raise their rates, deposit rates. And then on the other hand, there are the small banks. And you have to understand that the small banks, they have a much higher deposit rates, interest rates, apart from for the fact that the state guarantees all of the investments, regardless of the bank. Ukrainian, international, small or large, whether you put a 100,000 hryvnia or a million, if you put there in hryvnia, you might make some money. Second question is, you might buy obligations, both in hryvnia and in euros and dollars. This is, you're resolving two questions. A, you're helping the state beat the enemy, because when you have a massive deficit, you really have to hold the financial line, and so everybody can make their little bit, can do their little bit, and then on the other hand, you're also making money. So the income on the war bonds is varies, of course, but in the hryvnia obligation, it's constantly being raised. The highest rate I've seen is 16% annually. By the way, these aren't taxed. When you get this in dollar, you have to look. I think depending on the term, I think it's about 3 to 4% annually. Again, this is not taxed. Thank you very much. With us was Vasyl Furman, Deputy Chair of the National Bank of the Council of the National Bank of Ukraine, talking about the rates, the economy, and the policy of the National Bank. Our next briefing will be at 1 o'clock. We'll be talking to Dmitro Butrij, Deputy Head of the Kherson Regional Military Administration. We'll be talking about the situation in the